In this video, we are going to summarize financial news of some companies in paints and coatings industry for first quarter of 2020. So, let's start with BASF. BASF Group's sales in the first quarter of 2020 increased by 7% compared with the prior year quarter to 16.8 billion euros. This was mainly driven by a 4% increase in volumes. Income from operations before special items was 1.6 billion euros, down by 6% compared with the first quarter of 2019. The decline in EBIT before special items was mainly attributable to significantly lower contributions from the chemicals and materials segments and from other. BASF Group outlook for 2020. The sales and earnings forecast for the 2020 business year provided by BASF on February 28, 2020, will not be able to be met. The company is therefore withdrawing its outlook for 2020. It is currently impossible to reliably estimate both the length and the further spread of the coronavirus pandemic, as well as future measures to contain it. Consequently, concrete statements on the future development of sales and earnings cannot be made at present. BASF expects to be severely impacted by the economic consequences of the global weakness in demand and drop in production, in particular, as a result of the ongoing production stoppages in the automotive industry. The effects of the coronavirus pandemic will also impact other customer industries. As a result, the company anticipates a considerable decline in sales volumes in the second quarter of 2020. BASF currently expects a slow recovery for the third and fourth quarters of 2020. How the situation develops is, however, extremely uncertain and not predictable at this point in time. BASF will quantify its expectations for the future development of sales and earnings as soon as it is again possible to make a reliable forecast. Let's move to PPG. PPG reported first quarter 2020 net sales of about $3.4 billion, down approximately 7% versus the prior year. Selling prices increased more than 1%. Sales volumes were down 8% versus the prior year, in aggregate, including an estimated impact of the COVID-19 pandemic of $225 million, or about 6%. Unfavorable foreign currency translation impacted net sales by more than 2%, or about $75 million, and acquisition-related sales, net of divestitures, added about 2% to sales growth. Let's continue with AkzoNobel. Adjusted operating income up 31% to 214 million euros, 2019, 163 million euros, despite impact from COVID-19. Return on sales, excluding unallocated costs increased to 12.4%, with price mix up 2%. Operating income up 65% at 187 million euros, 2019, 113 million euros, OP margin improved to 9.1%, 2019, 5.2%. Transformation and other savings delivered 44 million euros lower costs compared with the first quarter of 2019. 408 million euros of 500 million euros share buyback program executed during Q1 2020. AkzoNobel CEO, Thierry Vanlancker, commented, "Our results for the first quarter demonstrate our transformation was fully on track, even though COVID-19 already had a significant impact, especially in China, and later in the quarter other regions of the world. Our performance improvement accelerated, resulting in business return on sales 330 basis points higher at 12.4%. These results were possible due to the passion and commitment of everyone at AkzoNobel, who have been working and winning together during unprecedented circumstances." Covestro to meet guidance for first quarter despite coronavirus impact. Core volumes decreased by 4.1%. Group sales total approximately euros 2.8 billion, 12.3%. EBITDA at euros 254 million, in line with guidance 42.5%. Net income at euros 20 million, 88.8%. Free operating cash flow at minus euros 249 million, as expected. 2020 AM rescheduled to July 30. Clariant profitability to remain resilient despite difficult economic environment. Clariant, a focused, sustainable and innovative specialty chemical company, today announces first quarter 2020 continuing operations sales of Swiss francs 1.019 billion, compared to Swiss francs 1.164 billion in the first quarter of 2019. This corresponds to a 6% decline in local currency and, due to an unfavorable currency effect, a 12% decrease in Swiss francs. The group was confronted by a lower demand environment in the first quarter of 2020, amid a mild winter season, and the COVID-19 pandemic. Efforts to minimize the impact of this pandemic are fully in place based on a strong balance sheet and liquidity position. Clariant continues to assure employee safety first, while concurrently running business continuity programs and implementing cash measures. Outlook-focused portfolio to achieve above-market growth, higher profitability and stronger cash generation in the midterm. Clariant is a focused, sustainable and innovative specialty chemical company that aims to grow above the market to achieve higher profitability through sustainability and innovation. The group is significantly reshaping its portfolio through the divestment of healthcare packaging in 2019, the announced sale of Masterbatches, and the planned divestment of pigments. Let's move to Eastman Chemical Company. Eastman Chemical Company corporate results 1Q 2020 versus 1Q 2019. Sales revenue decreased primarily due to lower selling prices. The lower selling prices were primarily due to lower raw material and energy prices and increased competitive activity, particularly for chemical intermediates and tire additives and adhesives resins product lines in the additives and functional products segment. Sales volume modestly increased in personal care and wellness, water treatment, architectural coatings, agriculture, and consumables end markets. This growth was mostly offset by lower volume attributed to weak demand in transportation and textile end markets due to COVID-19. Reported and adjusted EBIT increased due to higher sales volume, lower raw material and energy costs, and lower variable compensation costs. This growth was partially offset by $30 million lower volume and less favorable product mix as a result of COVID-19 and an unfavorable shift in foreign currency exchange rates. Adjusted EBIT margin increased by 220 basis points. Huntsman Corporation reported first quarter 2020 results with revenues of $1,593 million, net income of $708 million, adjusted net income of $65 million, and adjusted EBITDA of $165 million. Peter R. Huntsman, Chairman, President and CEO, commented, "Fortunately, we have been well prepared for this global economic crisis. The ongoing transformation of our business has made us a much better company. Our balance sheet is stronger than ever before, with significant cash and robust liquidity. Visibility has at no time been more difficult, but our portfolio of businesses has never been more differentiated. In this environment, we are laser-focused on what is in our control and protecting our balance sheet strength. Having learned from prior crises, we preemptively reduced unnecessary inventories and are reducing capital spending this year by 30%, or approximately $90 million, by delaying discretionary spending. We have proactively taken other measures, including suspending share repurchases and various cost reduction measures, yielding immediate benefit. We will accelerate our plans to achieve synergies with our recent and pending strategic bolt-on acquisitions and aggressively press forward with the global scale-up of our differentiated platform. Our company is ready and able to take advantage of opportunities to come, and I am confident that Huntsman will emerge from this global crisis a stronger company."
To learn more, visit www.paintsandcoatingsexpert.com.